Leviathan here with an update for what is going on in the markets directly from the CME trading floor. So, first of all, got to mention the CPI that came out today, which was kind of in line with it was bang in line with expectations, pretty much. However, looking at a year-on-year 4.2% inflation rate, which I've got to be honest is probably a bit low. I don't know how they're fixing things in the BLS at the moment, but looking at when I go to a grocery store, things are a lot higher than what they were a year ago. But anyway, we'll go with that. Trump, however, loves inflation, according to a quote he made not long ago when asked about it. The markets, however, not so much. SPOOs are modestly off, 56 points, 0.76%. The long end is marginally lower. The 10-year, which had, with the auction that came out, I'd have to have a look at the results of that. But that's a bit lower. 10-year currently yielding 4.53%. And comfortably staying above 4.5 for now. Long term, that's not great. And then we're going to go and have a look at the December contract, and we're going to start a new series of, well, maybe if it gains any interest, please respond to me if you think it's good, but Leviathan versus ChatGPT, or Leviathan versus anyone really. Today we're going to do it versus ChatGPT, and I asked ChatGPT what would be a good trade for a hike in the market in the SOFR options by year end, and that is the one we're going to look at. And we're also going to have a look at Adobe, whose earnings are coming out tomorrow. So let's have a look at what ChatGPT came out with. Well, first of all, I would like you to note this here. ChatGPT recommended a 57.62 put 1x2. Fucking, it is awful. My God. Number one, is not a good trade. Number two, for most of you out there, this opens you up to all kinds of downside risk. Selling two options versus buying one leaves you exposed. If something happens untoward, you will not only lose the money that you've put out on this trade, you will lose your house, your wife, your dog. So just don't do it. Don't listen to all the crap that is around that suggests option trades, because they're not really very good. And why is ours good? Ours is good because we use it. It's an institutional tool and is based on risk and reward. I don't want to lose my house. So therefore, we look at trades that have limited downside. So, or you know what your risk is. So two trades. I'm going to go back to the one that I still love dearly, because at the moment we're sitting at 96.06, and the implication here is that we're going to have more than one hike. One hike is priced in as 100%, but with 06 you're looking around a 20% chance of two hikes. Well, if that carries on filtering through, and that does happen, we will drift lower, and there are some good trades to still put on. The one I like for that was the 57.60 put fly, or have a look at the details here. I'm shorthanding it. These are the strikes. That's how we refer to the strikes here in the SOFR market. We take the two middle ones and to shorthand. But it's a 95.75, 95.87.5, 96 even put fly. If you can get this anywhere near this price, you're looking at making 4.5 to 5 times your money, and that's your downside as well. You're just losing that. If you do this trade, it's going to carry you out. And even when you scroll down, it also suggested doing a 57.62 put spread. That is so far down the list of risk reward trades that it doesn't even pick up. You're talking about a put spread that, if you give me a second, um, has a value of, oh, for fuck's sake, the current live value of that is 21 ticks. What a horseshit trade idea for it to come up with. It's just, no, don't do that. That's like, it just makes no sense. So, yeah, the AI is a great example. If you put in, and we can go ahead, we'll look at uh, Adobe. Why not? We might as well go head to head with ChatGPT on that too. But anyway, this is a trade here for two hikes. We'll go back and look at the one and done scenario. Uh, that one up here is a good trade as well. The 58 plus O plus 1 plus fly. It can be call or put. The system chose call fly. Buying a call fly of equidistant strikes is the same as buying a put fly. This one will be a good trade as well. Your risk reward there is just what you pay out, and it's a 350% return on that one if that comes to fruition. These are the two trades: one hike, two hikes. Those are two flies that I would suggest you do, and completely ignore anything that ChatGPT comes out with. I'm going to claim a 2-0 victory on ChatGPT, and I'm just being kind to ChatGPT for that. Let's have a look at Adobe now before I go any further about the markets in general. Adobe has had a bit of a torrid time in the last 2 years, as you can see here on the chart. Target wise, if the trend continues, you're looking at possible 200 from here. Any bounce could easily see it back up to the 300 area. So these are the two areas I've looked at for year end. We'll look at the downside. The market is kind of the trend is your friend. There's a couple of double your money trades. I think this one's not too bad. The 170, 180, 200 put fly, only because it's cheap. So I know what my downside is. It does have a small delta, so it will increase in value as we go down. So you could see it kind of like, you're going to make 30 or 40 cents even on a knee-jerk reaction. You need time to go by before you really see that fruition. Got a kind of bottom right corner there. But basically it's saying, this is what the market believes. It doesn't quite believe in the chance of a rally. But we like playing contrarian. Oh, no, wrong one. Sorry, we'll go back and click on the 300. Now, rally-wise, there's actually a couple of really good trades to do. Actually, some insanely good trades. I actually like not the top one that we picked. I'm going to go for the second one. Now, I get why our system chose it, and I will probably be proved wrong and the system right over the course of the time. I just like the lower strike. It just gives me a bit better chance. Although the premium you're paying for this is a lot more. I'm looking to pay just over $2 to get out at 17 and a half, $17.75, as opposed to paying 71 cents to be able to exit around 6.87 bucks. Because it's cheaper, you can put on more, and so the system likes that as an ROI. I don't know. I should go with the system. Every time I do this, I'm proved wrong, and the system is better. But whatever. It's a it's a lower strike, so it has more of a chance of getting in the money. And yeah, even on a knee-jerk reaction, that one's going to increase in value by 60 cents to a buck. And also, these upside flies are really cheap, relatively speaking, just because this trend has been consistent and been on for so long. It clearly, even though we're trading 240, so it's kind of midpoint I'm looking at. But there's a lot more trades to do for a bounce on the upside than there is on the downside. This one here is in its third percentile, which means an equidistant, looking an equidistant fly, distance from out the money. That this is in its third percentile, sorry. And so I kind of like that one. And just as a punt, yeah, let's have a look at this one as well. What the hell? One's in its sixth percentile, also very low. I see the point. This one you could make like 20 to 30 cents on as opposed to 50 cents, but you're paying out a lot less for the privilege. So, this one system likes. So pick either one of these if that's your, if you kind of like Adobe and want an upside trade. Either two of these flies are the best to do. Just out of curiosity, is a good option trade on Adobe if it gets to 300 by year end. So it likes call spreads, December 250 to 300. Now, let's have a look at. All right, so again, it sucks. It's really not very good at option trading, is it? So apart from the fact that this trade is at $14.30, it's also fairly high in its ranking. It's its 68th percentile when looking at similar trades. So even though you're paying out 14 bucks, that you could lose all of that. Now, granted, it will monetize a lot quicker if you take a jump higher, like immediately after the numbers, and it's probably going to hold any call spreads will hold. It's picking a 250 though, maybe a 260, 300 call spread. Um, let's have a look at the value of that. Do, do, do. See again, this one's around $11.35. So if you're wrong, you will get your ass handed to you. Again, it's it does monetize better than the fly, uh, but I'm trying to capture trends here, not take a wild gamble on what the number will be. Uh, so again, my risk reward here is a lot greater on a call spread that's now in its 80th percentile, by the way. If you look at that, versus what we chose for you, which in every metric is a better risk reward trade. Um, yeah, I'm going to claim victory on ChatGPT on this one. Um, and if you'd like to see us battle any other AI systems, please ping me, darren.cret@leviathanfm.com, or message me through the site, leviathanfm.com. Yeah, other than that, at the end of the day, none of it matters. It's all going to be on the back of what happens in Iran. That's the main take from the way the markets are trading and moving, um, and whether or not we're going to be stuck in another forever war, because it certainly seems, regardless of what's being said, that a peace deal is getting further and further away into the distance. So, as per usual, keep an eye on geopolitical headlines. They'll move the market. So, um, yeah. Um, and we will look forward to the World Cup that is starting tomorrow here in the US. And hopefully it will go well. The Even with a lot of people being denied entry to the country, supporters and officials alike. We shall see. Anyway, as I say every day, better be lucky than be good. So, good luck to you all and have a wonderful day trading, and speak again tomorrow.